Buy heavy. This stock will lift off by August 2025. Now, if you're not in this stock, you could be missing out on an incredibly huge amount of potential upside. That's what people are going to tell you on the internet. We're not going to do that here. This is Ask Me Anything Friday. That is my clickbait intro. Thank you so much for clicking and sticking around, because I'm actually going to teach you how to trade the correct way rather than all this hogwash about buy heavy. This stock will lift off by 2025, which you see all over the YouTubes right now. If you've lasted this far, hopefully you understand that we take trading seriously around here, and it's not just about the clickbait titles. So let's get into it. Today, I'm a little bit miffed. Because I took a loss yesterday. Oh man, I took a loss yesterday, and the outliers who followed me also took a loss yesterday. But I feel like people on the internet really get too deep in the minutia and forget to step back and look at the big picture. Now, where I'm going with this before we start answering questions is one of my all-time favorite trading books is this, The Man Who Solved the Market, How Jim Simons Launched the Quant Revolution. A fantastic book. Jim Simons, we actually did a video about him not that long ago, is the very most successful hedge fund manager in history. And I would bet you that he takes losing trades. Right? I don't think that he has a 100% win rate. In fact, I can guarantee he doesn't have a 100% win rate. Yet, when I try to coach people on YouTube, when I show people how trading is done, and they have a single loss, they feel like the world is ending. And it pisses me off so bad, right? You're going to take losses. Get over it. It's okay. Now, this is why I want to stress the getting over it is okay part, right? I have lost so many times, I don't even notice it. But then I try and teach the outliers, and they lose their shit in the Discord because they can't take a loss. First off, plan on taking losses. Second off, plan on taking losses. Nobody has a 100% win rate. It doesn't happen. And if any YouTuber is out here claiming they're so smart, 100% win rates, you never lose, they're full of shit. Okay? Just let me make that abundantly clear. Okay? Let's get real cranky right here real quick.
Anybody who tells you they have 100% win rates is full of shit. Hot dog shit, garbage, monkey donkey shit. Okay?
It's just a fact. Get over it. Now, why am I so adamant about this, right? Jim Simons, David, yes. Should we plan on taking losses? Freaking yeah. Okay? Freaking yeah. Now, Jim Simons, as I was talking about here, the most successful hedge fund manager in history. I asked ChatGPT this morning. I said, hey, in fact, hang on. I did this just for way oversharing. I did this while I was on the toilet this morning, right? Does Jim Simons at Renaissance Technologies win every trade he takes? What's his win rate and his annual return? Wonder what that is. No, Jim Simons, the Medallion Fund at Renaissance Technologies, the literal book on the man who solved the market, in bold, ChatGPT wrote, does not win every trade. Far from it. So why do you take one random trade and you base your entire life's outcome on one trade being a winner or a loser? Oh, I'm so worked up about this. I'm so worked up about it because I swear the reason that I get so upset is because I show you what it is like to be a real trader. But so many people come to the table, come in our Discord, come to the YouTube comments, and they're like, oh my God, the stock is down. Ah! The strength in any system, in any profitable trader, lies in statistical consistency and combining many small edges over a large number of trades. Okay? Your winning percentage, or his winning percentage. Quant traders jokingly describe Medallion's win rate at 50.75% as barely above random. One of the greatest hedge fund, if not the greatest hedge fund manager of all times, win rate is 50.75%. Brian, I love you, dude. Thank you so much for that. Don't worry about sending me super chats. I do this because I love the game. You're awesome, though. His win rate is 50.75%. And you follow a random guy on the internet and you think you have to have a 100% win rate. Get the frick over yourself. You are not Jesus. You are not walking on water. You are not perfection. It's not going to happen. Why do you act this way when you have a single loss? Yet the fund with a terrible, horrible, no good, very bad 50.75% win rate captures gains through disciplined execution and the law of large numbers. This is why I really stress. Hang on. Got to get to that slide real quick. Where's that slide? That is why I really stress there are no expectations on the outcome of any one trade in particular. Right? On the any one trade in particular, even in Jim Simons's Medallion Hedge Fund, can be a loser. Any one trade can. So stop setting such high expectations for yourself on any one trade, right? Here's how his fund with a 50.75% win rate means every other trade is a loss, basically. Win trade, lose trade, win trade, lose trade, win trade, lose trade. But over 1,000 trades, he happens to come out slightly ahead. And I would bet you that those winning trades are bigger than his losing trades. So even though he has a 50% win rate, I would bet you the winners are bigger than the losers. Here's how the Medallion Fund has performed historically. Annual return before fees, 66%. Now, I know some of you are going to look at this and they're going to say 66%. That's nothing. That is nothing. That is baby talk. That's itty bitty baby funds. Trust me, I've had these YouTube comments. Right? I was sharing my results the other day. I'm in a slight drawdown right now, and I'm okay with that. But at the time, I had a 56% return for the year, and the person was like, 56% is not very much. You shouldn't be sharing that with people. Are you? I had to bite my tongue on that one. Otherwise, you'd hear me speak French. The greatest hedge fund manager of all time, 66% returns, annualized, with a 50.75% win rate. David says, yeah, I'll take 66% all day. And guess what? He has losers. He has losers built into his plan. Are you operating from, I have losers built into my plan, or every one of these has to win or I am bankrupt, or I understand that every time I put money in the market, it's at risk, or if I don't win this trade, I'm just going to hold it until it comes back? It just drives me up a wall. If you aren't planning to take losses, then you aren't planning to be successful in the markets. If you don't plan to lose trades, don't even plan to win. Okay? If you are not planning to take losses, you will never be successful in this game. I know that sounds crazy. Call me whatever name you want, right? But get over it. Get over it. So what I wanted to share with you as well is my returns so far this year are at, because I'm in a drawdown right now. I absolutely am. I'm at 42.57% mark to market right now. My high for the year at one point was 59.19%. Okay. I took some losses for the year. But of 1, 2, 3, 4, 5, 6 months that I've traded, 1 month has been a losing month. 1 month has been a losing month. And I'm still up for July, by the way. Still up for July. This is how trading is done. Now, one thing I want you to look at as well is what's called expectancy, the edge. This is how you can mathematically know, are you doing something right or are you doing something wrong? So let's calculate that. Now, here's the deal, right? I can talk all this all day because I have the numbers to back it up. I know I am profitable. I know in my very worst case scenario, I'm going to be profitable as frick. Can you say the same? Can you take a trade following a random guy on the internet, actually follow the plan start to finish? Probably not. But if you can have returns like this too. I know it's not thousands of percents. This guy doesn't know what he's talking about. It's only 42% so far in July. But let's look at expectancy. I want to talk about expectancy for a minute. So what I've got here are all of my trades from 2024 and 2025. I figure 2 years worth of data is enough, right? Some of these, in fact, let me do this. Let me do a little conditional formatting going on here. Conditional format. If sell is less than 0, then make it look like the worst day of your entire life. Then add another rule. And if sell is greater than 0, make it look like, oh my gosh, Lambos, right? Okay. This is how people treat trading, and it drives me crazy, if you can't tell by now. So this is, trying to make this a little bit bigger. There we go. So these are my 2024 trades, right? See some wins, you see some losses, you see some wins, you see some losses, right? Now, my 2024 results, 49 trades. The average win was 18.97. The average loss was 17.90%. My win rate was 69%, which is actually really good. And my expectancy was a little bit low for me at 7.69. Meaning, every trade that I put on in 2024, the average return basically was 7.69%. Oh, hang on, you can't quite see that. The average return is 7.69%. This is the edge that you're looking for. Expectancy is the edge that we're talking about here. Now, why do you care about expectancy? Expectancy means if you put on 100 trades, on average, you can expect that the average return, on average, in this case, was 7.69%. On average. Now, look at these right here, right? I ended the year with a little bit of a losing streak right after the election. A little bit of a losing streak. But on average, my expectancy was 7.69%. I didn't even have my total results in here. They were like 91%-ish, give or take, returns for the year with an expectancy of 7.69%. Okay? If you're not planning to take losses, just plan on losing the game outright. Next, let's look at 2025 results so far, right? Actually, 2025 has been a lot better. OVTLYR 3.0 is much better than OVTLYR 2.0, right? And these are the results that I've got. I mean, some of these over 100%, right? Some of these losers, 20%. Katos really sucked. Right? DT sucked. That's okay. DVN is a loss. Fine, whatever. So I'm at 30 trades so far this year. My average win is 40%. My average loss is 27%. My win rate's at 60%, but my expectancy is 13.1%. So it's almost double expectancy from what it was the year prior. Almost double my expectancy from what it was the year prior. What does that mean? That means my 2025 results are looking way better, almost by double, than my 2024 results. So as long as I continue to put on trades in 2025, following my same rules, I can potentially have double, given the same number of trades, of returns as I did last year. Wow. But Chris, you lost on that trade. You showed me this trade, and I followed you, and I followed you on that trade, and they were losers. You're a loser, Chris. Hang on, I got something for you.
Go yourself.
So, I mean, losers happen. I'm so passionate about trading. I don't think you understand. When Susan Ewell birthed me on February 19th, 1986 at 7:11 a.m., God sprinkled some magic dust upon me, and he said, Chris, you are born to be a trader. Now, it took me, a couple decades to figure that out. But this is what I was born to do. I love this as much as I love my wife. Don't tell her. I love trading so much. It gives me the greatest joy on earth to trade. And part of trading is taking losses. I'm so fired up about this because it drives me bonkers how people act when they take a loss, or being scared to take a loss. They're greedy AF, but are so blinded by their greed that they can't see I need to follow a plan. Or they're scared as shit and they can't see they need to follow their plan. Now, how about for 2024 and 2025 combined, right? My combined for the 2 years, 79 trades, average win 26%, average loss 22%, with a 65% win rate, with a 9.74% expectancy. That's not very much, Chris. That's not very much at all. Chris, you really shouldn't be trading. If this is your 2-year average, you shouldn't be doing this. Well, how about this? How about we run a little math behind it? Right? So win rate over the last 2 years, 65.82%. I actually filled this in already. Okay. My average win 26.37. So we'll put in 26.37 over here. My average loss 22.29%. So 22.29, right? So by doing this, I have an expectancy of 9.74. Expectancy, $973 in this case here. Now, what we're going to run is called a Monte Carlo scenario. And a Monte Carlo scenario is going to run all kinds, literally 1,000 different iterations to see what returns you could potentially expect. Now, this does not compound the returns. This is just linear, right? If you compounded the returns, it would look like this rocket ship, right? SpaceX going to the moon. Okay. Now, this is just linear growth. This is not exponential growth. But my worst case outcome, hear me out. Worst case outcome, positive $213,000. Sounds good to me. A cool $250,000, easy peasy. And that's just on these numbers, right? It's not actual numbers here. I'm good with that. You good with that? You good with that? You tell me in the chat. You good with that? My worst case outcome, a cool $250,000. My average outcome, $356,000. My best case outcome, over $500,000 on trades that literally have a win rate of $2,600 or $2,200. You good with that? The starting balance is 0. Starting balance, 0. Corey's good with that. David's good with that. Nate's very good with that. Chuck says, Chris, do you really think I'm no Jesus? You just burst my bubble. Sorry, dude. So forgive me for being so upset. But when you get so wrapped up in the intraday, and this is really the message that set me off. Somebody in Discord was like, Chris, I think we should do an analysis to see how often the intraday moves bounce down to your stop loss and then bounce back up so we can have an idea of what that looks like. And I was like, all right, we've gone too far. We are over the deep end here. We are in the deep end swimming with no floaties. Okay. The plan is on a daily basis. That's my plan. You do your plan. Whatever your plan is, do it. Jim Simons' plan accounts for losses. He's the greatest trader, greatest hedge fund manager of all time. One of my mentors, Mark Minervini, known as potentially the greatest stock trader of all time, plans to take losses. If you aren't planning to take losses and you get so upset and so worked up by every single candle move, every 1-minute candle move, every 5-minute candle move, and you are glued to your screen all day long, you're doing it wrong. Absolutely doing it wrong. Okay. So that's my rant for the day. I love you guys. I love trading. I'm so grateful. You have no idea how grateful I am to have found a community that we can do this together. This is so exciting and it's so fun, right? But this is some real talk that you're going to have to work on. You have to start planning to take losses, because planning to take losses can leave you with a portfolio that looks like this. Not planning to take losses will bankrupt you. That sounds crazy. But if you aren't planning to take losses, you're going to break out of the game. Right? You're going to blow out the game. 90% of traders blow out their accounts in the first 90 days of trading. 90% of people lose 90% of their accounts in the first 90 days of trading because they can't take losses. Learn to take these losses and you can move on and you can have an incredible career in trading. But it's not going to happen. Not going to happen until you learn to take those losses. All right, I'm done. I'm done with that. I'm scrolling up for questions now because I love you guys. I hope that was all right. I hope that was all right. Okay, I'm scrolling way up. I'm looking for hashtag Qs. Like Juma says, can I have a wrench? Go for it. Gene says, are you talking about SoFi? I wasn't, but we can talk about it for a moment, I suppose. SoFi. Man, SoFi is looking awesome. SoFi has been like, this is what we're talking about, right? SoFi is such a beautiful stock and this big, beautiful trend right here. If you want to know what a big, beautiful trend looks like, SoFi is going to go down in the record books as that. Now, here's the thing. In fact, let's jump into Outlier real quick because I'm sure that fear and greed score is getting really, really high on SoFi. And that gives me a lot of concern. Does anybody remember hymns? Raise your hand if you remember hymns. Raise your hand if you remember hymns. I'm getting nervous we might see something like that in SoFi. The irrational exuberance makes me really nervous on SoFi. Still got that buy signal, right? That buy signal came through on, what date was that? June 20th in Outlier. Let's go back to SoFi. June 20th was that buy signal. Oh, I already marked it right there. And since that buy signal, Outlier has gone up close to close so far, 39% or 37.95%. Huge move on this. One thing that always makes me nervous is to see the fear and greed go higher and higher and higher and higher. Right now it's at 85. The deeper it gets in fear and greed, the higher likelihood there is for a snapback. So, I mean, it looks big and beautiful right now, but don't be surprised if we do see a snapback. I don't know when, but it makes me really nervous to see a stock move like this. Like, ride that trend, ride that baby as high and hard as it can go. But just be ready to bail. Just be ready to bail, or you might end up in a HIMS situation. In a HIMS situation where that huge move 100% evaporated. It's not fiction. This really happens. It even happens in big stocks like Tesla, right? This was 124% up move that 100% vanished because people didn't know when to get out. People didn't know when to get out. You need to have that plan to get out. All right, I'm looking for hashtag Qs now as I scroll down through here. Looking for hashtag Qs. Again, as we are doing this, put hashtag Q plus your question in the chat because that makes it a lot easier for me to find those questions. Theo says, isn't it a risk of buying new option calls on Friday and holding them through weekends, as it's possible to bail out until Monday if the price goes south? Statistically, does it make any difference? Theo, in that regard, I would say follow your plan, right? I mean, there have been plenty. You have seen me, Theo. I know you have. Put on big. Hang on, Theo. I got receipts. This is not just theory. It got receipts. We're here. Let me zoom out slightly. Right here was a Friday. In fact, 5/13/25, give or take. I remember this was a Friday when I put these trades on. So it must have been the 9th when I started putting the trades on. Specifically, I remember, and my account went basically from flat on the year to up 29%. My account went up 29% over one weekend. That weekend specifically was when the trade talks with China were happening. Specifically, that weekend, Bessent was meeting in Switzerland with representatives from China. That weekend. And I saw so many messages. Chris, how could you do this? This is so scary. I can't believe that you would actually put your trades on at risk when all this is happening. First off, there's always a reason to not trade. In fact, I have a slide for this. There's always a reason not to trade. Theo, it's a great question. I'm not holding anything against you, my friend. There's always a reason not to trade, right? But if a trade sets up in your plan, you are obligated to take that. Larry Hite told me this. Now, Larry Hite was one of the very first billion-dollar hedge fund managers. He was the first billion-dollar hedge fund manager, one of the original market wizards. I worked directly with Larry, and the receipts are on my channel if you'd like to go watch some of the time that I worked with Larry. But one thing that Larry and I talked about, hang on, I'll even show you his chapter here in Market Wizards. Here you go. Larry Hite, Respecting Risk, page 175. Larry Hite, one of my mentors. The trade plan that you put together must be followed to a T. And when I say follow to a T, that means even if the last trade you put on was a loser, you still got to put on a new trade. You still got to. If you do not, you have completely invalidated the whole plan in the first place. There was no reason to do it. In fact, Larry said you should just, crumple it out and throw it out the window. That's what he said. Because if you can't follow the plan that you made, what are you even going to do? You're going to panic sell. You're going to panic buy. You're going to make all the mistakes in the world. And then you're going to wonder, and Theo, I'm not specifically saying you. And then you're going to wonder, why do I keep failing at this game? Why do I keep failing at this game? The reason you keep failing at this game is because you create these rules. And they don't mean anything to you, right? You don't have the consistency and discipline. You could publish the rules in a newspaper. No one's going to follow them. This is what I do. I'm living Richard Dennis's life right now. I put my rules out here on YouTube and nobody follows them. Oh, a certain amount of you do. And the other certain amount of you freak out anytime something doesn't immediately go vertical. If it's not going vertical, just check out our Discord and people are losing their minds. It's really frustrating. It's really tiring, Theo. You're good though. You're good. But to your point, is there more risk putting on trade Friday than on Monday? Not to me, because I'm putting on the same size that I would anyway. Of course, there's always risk in this market right now, especially political risk. So, dude, just follow your plan. Just follow your plan. All right, scrolling through all of the chat, looking for hashtag Q. Okay, Damon, good to see you, Damon. Hi, Chris. I'm in Hive at the moment, and my trade expires 1 week from today. Average price of 35 cents. Okay. Would you be able to pull it up and tell me what you would do in my position? All right, everybody knows what I'm about to say. Damon, what were you planning to do, dude? What were you planning to do? Damon, what were you planning to do? I mean, right now, it's in a beautiful trend. A 10 over 20 price over 50 is the outlier trend template, which you have right here. I don't know when you got in, if it was in a trend template like that, but looks good right now. Looks like it's going to bounce up nicely this morning as well. Damon, I don't believe we're going to cover Hive in Outlier, but I'll check. Outlier covers 2,600 of the most liquid stocks out there, and this is not one of them. So looking at this, where'd it go? What would I do? I would just follow my plan, my friend. Here's the deal. Do you have a plan? I'm not going to tell you what to do. Damon, I'm not going to say, you should do this or do that. The reason being is I need you to have some accountability here, my friend. It's not my trade. It's not my money. It's your money. What were you planning to do? Probably not what you want to hear. I understand. But my job here is not to say, buy this, buy that. My job here is to teach you how to fish, right? You can give a man a fish and he can eat for a day, or you can teach a man a fish and he can eat for a lifetime. Damon, I'm teaching you to fish, my friend. I want you to eat for a lifetime. Next question. Scrolling. Sorry. An Ask You. An Ask You is one of our regulars. I have two options with similar delta. The stock moved the same percent, but the options show different percent gains. Why is that? Or am I hallucinating? So delta, to an Ask You's point, is for every $1 move in the underlying stock, the delta is how much the option value will change. So if the stock moved the same percent, like if you had Coke, in fact, let's do this together and Ask You. Let's do Coke and Coke is a $69 stock. Tesla is a $309 stock. Now, a $69 stock going up 10% is going to go up $7. A $309 stock going up 10% is going to go up $30, right? Now, remember, delta is the percent change in every $1 move on the underlying stock. So the delta can be the same, but because the dollar change between Coke and Tesla are that much different, that's why you're going to see different results in your percent returns, because you probably didn't pay $2 on Coke and $2 on Tesla for those options. Unlikely. You probably pay $2 in Coke and $20 in Tesla or something like that. And it is all a function of the underlying stock moving dollar-wise more than percent-wise. It's a really good question, though. Let's do hashtag Qs. Still scrolling some more. Scrolly. Michael, Can you rank your book recommendations in order which you read first? Dude, I'm so glad you asked that question. That's why I pulled all these off. I want to get to this. Okay. So my top 5 trading books are Market. No, this is not it. Hang on. I love this book, by the way. Trading in the Zone. How I Made $2 Million in the Stock Market by Nicholas Darvis. New Trader, Rich Trader by my friend Steve Burns, probably the most important mentor I ever had, wrote this book. The Complete Turtle Trader by Michael Covell. And Trend Following, if you can get the 2012 edition, is the best version. I've read 2 of the different versions in the 2012 edition, also written by Michael Covell. He wrote both of these. Is way better. And this one, $10. Oh my gosh, this was the best $10 I ever spent my entire life, hands down. How would I rank these? All right, if I had all of these in front of me, do this desk over here. If I had all of these in front of me, I would say number 1, I would go with New Trader, Rich Trader. Hands down, no doubt whatsoever. New Trader, Rich Trader, top number 1 book I'd ever tell anybody to read. What would I put as number 2? I would say number 2, probably How I Made $2 Million in the Stock Market. Reason being is it is a really easy read, and you can learn a ton from Nicholas Darvis. So he was a dancer. Like, he'd actually go shake his booty on stage in the 1950s, running all over the world, making $2 million. What he found was the further away he got from New York, the further away he got from watching prices, the better he could trade, because he would just follow his plan. He wasn't distracted by all the noise. And then he came back to New York and was losing all of his money. And he's like, you know what? I should get out of here. And then he started being more profitable again because he wasn't looking at all the noise. So that's a really good one. That would be number 2. Number 3, that's tough. I'll save this one because I think this is number 5, but it's really the capstone. So number 3, let's go with Complete Turtle Trader. Next is number 3. This is the story of Richard Dennis, who we talked about just a moment ago, and how he trained complete newbies who had never traded anything before, which is what we're doing here on a daily basis for free, mind you. He trained these traders to be incredibly successful, and it's a really good read. Also great on Audible. So then number 4 would be this one. Now after you've whetted your appetite between New Trader, Rich Trader, How I Made $2 Million in the Stock Market, and The Complete Turtle Trader, you take it a step further and you read this textbook, which is called Trend Following. This is a fantastic book. It is a textbook, in my opinion, but boy, is it so good. You can learn so much about how the markets actually work by reading this book. And then lastly, you're excited. You've heard these success stories, right? You've heard these success stories that are in here. You've read the textbook. Now, going and actually implementing these things is the hardest part. And the hardest part is the game between your ears, not the game on the screen. And the Trading in the Zone book, by far, shows you how to stop messing up, how to stop effing up your account, right? How to stop being the 90% of traders who blow up 90% of their accounts in the first 90 days of trading. So as great as these are, it doesn't matter unless you can execute. This is your execution guide. Oh my gosh, I love this book so much. That was a great question. Let's continue here. Scroll. Oh, David says Trading in the Zone is a mindset changer. Absolutely is, dude. All right, scrolly. Looking for hashtag Qs in the chat. Yush, our friend Yush, what's up? By the way, I love Yush. Yush, actually, I've saved one of his posts on here, and I do like to reference it every once in a while. Everybody pay respects to Yush in the chat. YOOSH. Everybody pay respects to Yush in the chat. Order blocks are not actual live orders sitting on exchange. Instead, they represent areas of significant buying or selling by institutions. Yeah, Yush, you are a rock star, dude. I saved that. Okay. How do you determine the bullish sectors in OVTLYR? Yesterday, you mentioned in the Discord that there were only 3 sectors that are bullish, but I saw that only 2 were bearish. Is there anything else you look at? This is one of those nuances of trading with OVTLYR. So let's go up to this slide because I have some breadth exceptions. So for those of you who are unfamiliar with what we're talking about here, over in the market breadth tab is an indicator that yours truly actually created. I was so proud of this. And the way that I came up with this, Yush, is that this is measuring how many stocks are on the bull list versus the bear list, right? How many stocks have buy signals versus sell signals. And I noticed that when the buy signal list was getting longer, my trades were easier. It came so much easier. When the buy list was getting shorter and more sells were coming through, but I was still buying stocks. My trades were not as easy. It was not as effortless to make money. And so I asked Mahesh, our CEO, I was like, Mahesh, can you send me a download? All I want to know is how many stocks have buy signals versus sell signals. And when he sent that, I started, I basically created this chart in Excel. And I was like, whoa, this is so sick. What I noticed was as it was rising, right, as it was bullish, meaning more stocks getting buy signals, it became so much easier. As it turned bearish, you know what? All those buy signals that I was taking, they didn't work out so well. That's where this came from. And man, was it cool. Now, to Yush's question here, the sectors apply the exact same principle as the full stocks list. And you can see here, lots of bullish sectors. Only 2 have this crossover on their 10 EMA. Why would you say that? Hang on, where's Yush's comment here? Why would you say that there were only 3 sectors that are bullish? So let's look at a couple. Let's look at my rules here. If the bull list percent is over 75, only enter new trades if breadth is still moving up on that day. So let's go to, where's one that had a nosedive? Let's go to financials. Now we made some great money on Morgan Stanley and Capital One about a week and a half ago as it was rising. Then when it got over 75%, it went from 72, 79, 81. And then once it hit 81%, it pulled back, right? Started getting more sell signals than buy signals, down to 78. Up a little bit higher and then a little bit lower. And now it's about to have that crossover right there. My rule is as it's rising and going over 75, I'm good for it. But once it peaks and contracts, that's when Chris doesn't trade anymore until it resets. This would look like a reset here where it comes down and comes back over. So I'm waiting for resets on basically everything except for those 3 sectors. That makes sense? All right. Let me see. We'll take one more question. By the way, I love doing this so much. This gives me so much joy. You have no idea. Okay, Mike G, great question. Right, and this is kind of what I was having to vent about earlier, right? If a trade hits your stop loss due to if your trade hits your stop loss at any point in time, whatever the factors are, and the market is clutching its pearls, do you always sell or do you give it one more day to bounce back? As the pattern show it does. I don't know about the pattern showing it does. Do you give it one more day? Absolutely not. No chance whatsoever. I will never, because I did it for a long, long time, Mike. I tell you what. Mike, I would say, okay, if my stop loss was $99 and I bought a $100 stock and it came down to $99, Chris would be like, well, that's okay. Don't worry about it, right? The pattern, right, for that example, since you mentioned it, the pattern shows that it'll bounce back up, right? And then it went from, so I'd say, okay, I'll move my stop down from 99 to 98. And then what does it do the next day, Mike? You know this. It go from 99 to 98.50. And you're like, we're good, right? And the day after that, it goes to 97.30. And you're like, okay. It can't go down any further. Let's give it one more day. 96.20. And you're like ready to throw stuff at the wall, right? Oh man, I remember vividly going through this over and over and over and over and over, Mike. Oh my gosh, I went through this over and over and over. And then, it might bounce back up 10 cents and you're like, oh, here we go, freaking finally, right? And you move your stop back down under it, and what does it do? Plows through it again. There's no sense in doing that. If your stop loss is hit, you are obligated. We talked earlier about following a plan. You are obligated at that day, on that day, not the next day, to exit the trade. Obligated to. Now, there's a slide I want to share with you real quick here as well. This also came from Mark Minervini, and it is knowing you should sell when your stock plows through your stop loss, but you're afraid to because you're afraid that's going to turn around and do that, right? It's exactly what I went through, Mike. I know exactly what you mean. I'm not calling you to the floor at all, dude. I've been there. And you're scared it's going to go back up, and you're going to make a mistake, and you're going to lose the money, and you're going to book that loss, and it's going to suck. But if you don't take your stop loss, you can get caught in this. You can get caught in this kind of move. Right? Your stop loss is there as an insurance policy. Right? It's almost like so I drive a Tesla. Let's say that you have insurance on your Tesla and you bang into something and you're like, oh, that's fine, right? And you go down the road and you bang into several more things, right? Oh, that's fine. And then you just like flat out crash it, right? Sure would have been great if you had fixed it the first time before you ruined your car because you had the insurance. That's what the stop loss is there. It's an insurance policy to protect your account from ruin. Now listen, Mike and Frankie, I see you there, Frankie. What's up, dude? Glad you made it. If you're ready to save time, make money, and start winning with less risk, and everybody else as well, make sure you click one of these 2 videos. Have a fantastic day. We'll talk soon.